Good morning, good afternoon, and good evening from sunny San Francisco Bay Area. My name is Andy Tsao. I'm head of our Global Gateway at Silicon Valley Bank, essentially the center of international relationship management and business development for the bank. We serve startups, scale-ups, VC and PE firms from key global innovation hubs. I'd like to start by welcoming SVB clients, GPCA members, and participants from around the world. We're super excited to be hosting today's webinar that will discuss global tech trends. I'd like to start by thanking our partners at GPCA for co-organizing today's webinar, in addition to the fantastic speakers that have joined us today, including Carlos Ramos de la Vega, Head of Venture Capital at GPCA, who's joining us from New York. We have JP Gan, Managing Partner at INCE Capital, who's joining us today from Hong Kong. Michael Lints, Partner with Golden Gate Ventures, who's joining us from Doha in Qatar. Noor Sweid, Managing Partner at Global Ventures, joining us from Dubai. And Vani Kola, Managing Partner at Kalaari Capital, joining us from Bangalore, India. A truly global panel of leading investors. Before we get started, I want to point out some housekeeping notes. We are going to be recording today's webinar, obviously, and you will be getting, all those who have registered will be getting a copy of the recording when it's in the next couple of days. If you have questions, you can put them in the Q&A box, and we'll try to get to them as best we can. We have a great program today. Where we're going to start things off with a review of the GPCA report led by Carlos. Then we're going to turn it over to my colleague, Lee Song, who leads our Asia practice, who will moderate a conversation with our expert GPs. The global reset for the tech innovation economy continues, exacerbated by the increasing geopolitical uncertainty. But that being said, there are some silver linings. As the report points out, tech investment ex-China is increasing year over year. This is also the case when you look at the global VC investment, including the US, where you had global increasing deployment beginning the second half of last year, and that's continued into the first quarter, largely led by AI. However, if you strip out the AI investment, which is nearly half of VC deployment, it suggests that the other sectors' investment is still relatively muted. Clearly, AI is driving VC deployment, and we are still in very early innings of the platform shift to AI. It's an incredible time for technology with the advent of artificial intelligence. While the innovation economy is still starved for liquidity, we had some promising IPOs thus far, including FinTech Chime, which raised $700 million, 37% above its trading range just last week. There are some incredible private companies that are expected to IPO this year, and certainly more IPOs will be good for the innovation economy and return some of that much needed liquidity. Lee Song and I have just returned from visits to Europe and Asia last week, and founders and investors remain resolute and optimistic despite uncertain market conditions. Finally, a quick update on SVB. We're doing nearly all the things we've done in our past 40 years to support the global innovation economy today as part of First Citizens Bank. Our products, services, and strategy remain largely unchanged. First Citizens Bank is a 125-year-old institution with a history of stability and diversity of business. SVB, as a division of First Citizens, understands that the innovation economy is truly global. Carlos, over to you.
Thank you so much, Andy. It's a pleasure to be with everyone here today. It's sort of sunny, not so sunny here in New York, but like Andy said, we have like such a truly global audience. First of all, again, I wanna thank SVB for the longstanding friendship and the partnership with the Global Private Capital Association, and to our very esteemed group of leading investors who we can't wait to hear more about in a couple of minutes. But I was just wanting to set a little bit of the stage of what's happening here. We're going to be sending a specific report after this hour-long webinar. where we try to just convey what's happening with the tech story globally. Not only from a venture equity perspective, not only from an AI perspective, although that's dominating the headlines and the majority of the conversation, but also from a different type of financial instrument perspective. What are investors actually looking at? Let me just take one step back here. For those who are not familiar with GPCA, the Global Private Capital Association, we are a membership organization of around 300 global member investors actively deploying capital across asset classes in private markets. We cover everything from Africa, Latin America, China, Middle East, Southeast Asia, Central and Eastern Europe. And of course, we tend to shy away from the term emerging markets. We don't believe that all of these markets are still emerging, but we definitely call them less developed or less deep than the more traditional markets out of the Western Europe and the US. Very, very quickly, we're very excited about this report that we're putting out because it is definitely our most comprehensive version yet. It is a combination of surveying more than 500 firms in the market, of conversations with both institutional investors, GPs, founders in the market, and also trying to understand a little bit more about, again, what is there beyond an equity story that has seen some challenging years in the past couple of semesters at least. So with that, we'll share the full version of the report after this, but again, we couldn't possibly cover everything in just 15 minutes. So let me just start for the very beginning. If we are actually up for it, I don't know if we're being showcased the presentation. Everyone can see the presentation. Yes, everyone can see that. Okay, perfect. So if we actually go to the first slide, we can actually see how, again, the topics of the market right now is that venture investment keeps on being a very selective, thoughtful, and recalibrated thesis across global markets, right? Just like Andy was very rightly so pointing out, and very surprisingly, venture investment actually was up 19% in global markets, excluding China. And we'll have our own section to talk about China specifically and the momentum that it's gaining. But 90% up year over year, 2024 to 2023. I mean, again, the story of China is different, and they did see a 10-year low in private capital investment, very specifically private capital investment, and that will be addressed a little bit later on. As you can see, the markets that have seen the highest growth in the recent past include Southeast Asia, Middle East, and CEE, but some of these numbers actually have to be taken with a grain of salt, specifically because some of these bases out of the 2023 investment levels are still a little bit too small to be able to take into account the percentage change and the growth percentage here. It's also very important to see that how India has stabilized, right? And how India keeps on being a very robust venture market and tech ecosystem as a whole. And even though we just saw a single-digit increase, it still continues to be the second biggest market in terms of investment, right? We'll talk about exits in a little bit. Again, China has its own different story, and we'll see a little bit of the role of not only private capital investment, but state-backed capital going into financing and backing the tech momentum out of the sector. If we can go to the next slide, please. We can actually see here how, well, tech investment, again, like I was saying before, is far from just a venture story, right? It's very interesting to see for us that, again, digital infrastructure and credit are two of the main investment strategies that are supporting the tech story globally, and that have picked some of that lagging momentum that we saw in equities in the past couple of years, right? If we can go to the next slide, we can see here a little bit, a zoom in on just digital infrastructure before. We'll talk about private credit in a second. But in terms of digital infrastructure, I mean, what we saw first, number one, is that Southeast Asia, for example, saw the highest investment on record in 2024 for digital infrastructure investment at $4.4 billion just in one single year. The biggest deal, of course, was Day One, the data centers for Day One. 2 rounds closed at around a total of $1.8 billion, with backing from Code2 and SoftBank, but also from Chinese venture investors and tech investors, Boyu and Hillhouse. But even beyond that, right? Like, it's not about only data centers and the amount of money that hyperscalers are actually committing into the specific region. We're also seeing very important allocations from balance sheets of the big tech corporations globally that are doubling down in Southeast Asia very specifically and are committing sizable amounts of capital. Just to give you one example, AWS, for example, has committed more than $15 billion to Singapore and Malaysia for data centers and cloud infrastructure. Microsoft has committed more than $2 billion for cloud infrastructure, specifically for Malaysia. Google and Oracle are also doubling down in Malaysia. So Malaysia right now is very much at the center of attention for all of these big tech players. And it's a market that can no longer be ignored or understated its importance on the global scale. If we go to the next slide, please. Also, I think it's very important to, when we're talking about digital infrastructure, just take a little bit of a step back and see that, of course, again, Southeast Asia was the record region, but at the same time, it's still pretty much a global story, right? It's not only about Southeast Asia. We saw the $2.2 billion deal for Kazna in the Middle East, which Noor can definitely tell us a little bit more about it. But of course, we can also see that as in Latin America, right? In Latin America, we're seeing, of course, significant capital committed into data centers in Brazil. And more than $500 million just went to a single deal for scale data centers in 2024. So very important market, the second biggest market for digital infrastructure. And as a reminder, since everyone's a little bit too obsessed with the AI story, that is actually one of the main parts, main components in the tech stack powering the AI software foundational and application layer. How much money, how much compute do we actually have to be able to run these platforms? So that's for digital infrastructure. Now let's turn a little bit, and if we can go to the next slide, to talk specifically about private credit and debt. Again, far beyond just an equity strategy, an equity story here for venture. We're seeing now that specifically fintechs have access to very recurrent forms of either venture debt, collateral loans, credit facilities, debt warehousing facilities, in order to gain momentum and be able to either originate their own credit and lending platforms, or be able to grow their teams in a non-diluted basis. So we're seeing that, and 2024 was the consolidation of that. But the reality of things is that global markets have seen more than $9 billion just in equity, in debt financing, going into startups since 2022. That is 60% going into India and Latin America, which is also very impressive. Just two markets, 60% of the debt capital goes to them. But just like a very fun fact, fun story here at the same time. Again, I mentioned that fintech is a predominant sector that is capturing all of this debt capital. At the same time, though, the biggest debt deal in tech markets globally in 2025. In the first quarter was actually for Superbet, which is a sports betting platform out of Romania. So we can definitely see, of course, a data point does not make a trend, and let's be clear about that. But we can definitely see that this sort of liquidity for startups and this sort of balance sheet enhancement is not only just including fintech anymore. It's a broader story as well. If we can go to the next slide, please. We can actually see how beyond that, we can see that late stage is also against all odds. And of course, ex-China is still in the conversation, still increasing, and it was increasing in 2024. Of course, we already have numbers for Q1 this year. But if we try to analyze the number and just a little bit take away the seasonality, we can see that we might fall on the 20 billion run rate for in late stage capital committed in global markets, which of course, if you put it into a perspective of 2021 and 2020, it might seem small, but it is a very much a secular uptrend compared to the pre-pandemic levels that we're still looking at. So that's a silver lining. It's a very optimistic approach. Although we need to understand also that most of the markets that we cover outside of the US and Western Europe, and maybe India and Vani maybe can actually chime in on this, is the dependency for growth capital coming out of global funds and global investors that actually are investing in a very opportunistic way in these global markets. So to the extent that local markets are not developing local sources of growth equity, then the late stage capital environment is still going to be very much subjected to this macroeconomic trends globally and the protection of this global investors' portfolio in their core markets. If we go to the next slide, please. This is a very interesting one because we try to, in a very heat map kind of way, try to understand a little bit more what's in favor and what's out of favor in terms of business models, in terms of verticals of investment, and where's capital flowing on a global level. Not surprising to anyone on this call, fintech, again, an enterprise story is still the bulk of the story right here. Again, fintech and enterprise for the obvious reasons. But it's also very important to understand that the capital-intensive business models that we had seen in the past, such as e-commerce aggregators, are not so much in favor anymore, or models with increased complexity, or for example, the direct-to-consumer story, because they require a lot of capital, and in a capital-constrained environment right now, they're definitely not top of mind for investors or for entrepreneurs, for that matter, that are launching their businesses right now. Also very important to understand here when we're having some conversations with investors on the ground when we're putting together the report, that we saw that, for example, it's not only a cost of capital consideration for some players in the market, whether a strategy functions or not in the current environment. It's also about the cultural practices that some of these markets actually have. For example, investors in Southeast Asia were actually telling us how this enterprise software and SaaS story is actually not so easily deployed and implemented in Southeast Asia anymore, because there's still a cultural barrier for corporates, traditional corporates and legacy corporates, to be able to see more the human bodies and humans as better solutions sometimes to an automated platform on a software basis. And the cost of actually switching that culturally is the highest barrier to entry, much more than the benefits that can incur in the long term from adapting these platforms. Not surprisingly so, given again the remarks that I just made about capital intensity. The global markets are outside of China, again, still are not seeing a lot of investment in biotech, for example, or in hardware-based solutions, which of course, again, given the macroeconomic environment, it's understandable, but we're very much looking forward to seeing that changing in the coming years, in the coming decades, and having a solidified hardware environment also outside of China, the US, and of course, India is very much growing there, specifically in space tech, which is very surprising. If we go to the next slide very quickly and still staying on the intersection between markets and verticals, we're seeing, of course, the rise of embedded finance, buy now, pay later solutions, and payment platforms out of Africa and the Middle East. Of course, these have accounted for the majority of capital deployed in these two regions. And well, I'm sure that Noor here in Global Ventures can actually see Moneypoint and Tabby actually leading the pack here. One important point here that I would make is that capital concentration is still, and deal concentration is still an issue here, of course, and that is part of these two regions being more nascent and more developing ecosystems, I'd say. But for example, just to give you an idea, in Africa, in Q1 of this year, the largest deal, SwiftNet, accounted for 63% of all dollars deployed, right? Last year, 2024, 4 deals actually accounted for more than 50% of all capital. For the Middle East, the deal in Kasna, which granted is more capital intensive because it's data centers, but that 2.2 billion actually accounted for 78% of all capital deployed in Q1, right? So again, take it with a grain of salt, because we can actually differentiate these categories between what is digital infrastructure investment and what is early stage investment, and for the numbers to be a little bit less skewed. But the question and the challenge, again, capital concentration still stands. If we go to the next slide, please. Again, I am very much looking forward to hearing what Vani has to say here on the India story as a whole, of course, but specifically about how the quick commerce landscape in India is defying all odds, and how this business model with Zepto, for example, and with Flipkart is very much functioning there, and investors are still having a lot of appetite to back this type of opportunities, whereas in other parts of the world has definitely not being the case in the recent past. And just to give a very specific idea here, right? Quick commerce and just e-commerce investment across global markets dropped 66% in 2024. It actually increased 68% in India in 2024. So we can see that level of contrast, which is also very, very interesting. We can also have another conversation about what's driving on those business models specifically, and how they're actually switching to like a higher order value, for example, in consumer electronics, and what's a consumer preference there to make this business sustainable. But the fact of the matter is, it's working in India. If we can go to the next slide. And again, here, would love to hear what JP would have to say on the China story. But just 2 very important remarks that I would say here. Number one is, if you focus on the bar graph that we have on the left-hand side, you might think, well, these numbers are tiny compared to what we hear about what's happening in China. How come just $6 billion in 2024? Well, the reason is our methodology is very specific. We're only taking into account here private capital investment going into startups, private capital investment. We're not taking into account corporate investments. We're not taking into account state-backed capital. So, which of course right now is the majority of that capital that's going into these enterprises. So that's number one, right? Number two is we would be remiss, not only for China, but just globally, if we didn't make the statement that right now the AI story on global markets is very much a story about access, control, and just visibility into the best technologies at the frontier, much more about a question of what is going to be the financial return profile of some of these investments. We can see that just because of the huge amounts of money that have been raised just for AI funds specifically. But just in general, that's an important point to make, right? Well, I think the other part, which is also interesting, is again mentioning now, I'm going even deeper into China. I mentioned state-backed capital very specifically because there's been specific initiatives from the government, including the $1 trillion renminbi fund, which is around $130 billion, that was announced a couple of months ago that is going to be deployed in the next 20 years, just to sustain the momentum of what's happening locally. So it's just a thematic of decoupling geographically, but at the same time being able to be self-sustained as a region without having to depend on other actors and other stakeholders in order to catalyze their own AI reality and their AI opportunity, if I may. Very quickly, so we can hear from our investors. The next slide, please. Here, let's talk a little bit about fundraising. It's very interesting for any GPs who are actually listening to us right now. It is true that last year was actually the lowest level in 7 years for fundraising, like me. I don't need to be the one to say that fundraising is tough right now in the current market environment. More than $14 billion was raised, but again, a 7-year low. Very importantly, though, emerging managers are still being favored in a way within this flight to safety kind of feature, and the fact that a lot of LPs are actually doubling down and re-upping those traditional relationships that they already had. Still, emerging managers, they had a 30% increase compared to 2023 in the amount of capital committed. So again, it's very important to understand that even venture capital as an asset class right now, for any institutional investors listening right now, is not a monolith, venture capital. And it's whether from a portfolio construction perspective, whether they want to back a manager because they're looking for beta in their portfolio and they're looking just to have exposure to technology, in which case it might be better to go with one of the multi-billion, multi-stage global investor funds. But if what they're truly looking for is access, education, and growth in capital, then the smaller funds that can provide that alpha might actually be more convenient. And it might be more of a problem of how can you structure the right process to get that manager selection in the long term. But those are two completely different things, even beneath the umbrella of the venture ecosystem. Then we already talked about the specific part of China fundraising. But here specifically, very importantly, is the matter that while local denominated funds are falling out of favor, again, the ecosystem has become very self-sustained. And we've seen a rise of money just coming from renminbi denominated funds, raising locally from state-backed capital, institutional investors, or just from even retail investors sometimes on a local basis. So looking forward to seeing how that part of the ecosystem develops. Last but not least, I think it's very interesting to see that, of course, if you combine the dynamics of the Chinese public equity markets and the Chinese market in general having this decoupling in 2024 and the liquidity constraints that we're seeing globally with the India momentum story, you can actually see that for the first time ever, India actually surpassed China in exit activity, with more than $12 billion in reported exit value just in 2024. That's a first for the markets. The country claimed the top spot for global IPO volume for the first time. It became the world's fourth largest public equity market. So again, very, very notable. In Q1 in India, we already saw the exit of Hexaware, and Carlyle got a very handsome return out of that. But looking forward to see how that plays out. There was a slight correction in public equity markets in India in Q4 of last year, but that we're seeing already that a very important rebound. So looking forward to see how that sustained momentum actually grows. And I think we have another slide left on key takeaways, but I'm just gonna skip it for now. I think we look forward to just showcasing the full report and sharing with everyone here who's interested the full edition after this call. But I think I'll just hand it over to Li Song, the head of Asia for SVB, who's going to moderate the conversation now. Thank you so much, everyone. Over to you, Li.
Well, thank you so much, Andy and Carlos. Hello, everyone. My name is Li Song. I lead SVB's Asia practice, and out of here in Northern California, because of the amazing support from our Asia clients, SVB Asia is having a solid growth, very momentous growth. So today I wanted to invite our investors to give us a global view of what's going on based on the GPCA report. Carlos provided a lot of data there, and our investors will first briefly introduce yourself and then paint us a picture, the fundraising, the investing, the exiting in the greater China area. So JP, go ahead, please.
Well, thank you, Lee. As Carlos mentioned, I'm in a market that declined 40% year over year in the last couple of years. I guess that's a headline. However, looking at Carlos' chart, it seems like China is still the largest VC market outside of the United States, with $18 billion deployed, if I remember the number correctly from Carlos' chart. So declining 44% or 41% is obviously a very significant number. In a way, the correction is healthy since so much capital has been accumulated over the years, and there's been tremendous number of deals and amount of capital deployed in 2021, 2022. So some correction is healthy. I think in China, you can also see the breakdown of different sectors. I think most of the money went into artificial intelligence, semiconductor, hardware, and the robotic technology, as well as biotech. I think the good thing is in the last few months, there have been quite a few IPOs and exits. As you may know, Hong Kong Hang Index went up 20% year to date. There have been a number of multi-billion-dollar IPOs from battery maker like CATL and AI companies, consumer companies, biotech companies. The biotech sector has taken in quite a bit of licensing revenue from the global pharmaceutical companies. I think some statistics says 30 to 40% of global licensing deals, more than $50 million, is out of China. Just last couple of weeks ago, one of the biotech companies in China announced a $1.2 billion upfront payment from Pfizer. And the total package is $6 billion. I think increasingly we're seeing that type of licensing deal that will create exit for VCs and investor. So I think the bad news is the overall market's decline. The good news is it's still the single largest market outside of the US. There have been quite a number of exits, and I would think 2025 would be a good year for cash distribution to our LPs.
Amazing insight, JP. I love the glass half full attitude of that. So appreciate that. You also mentioned several IPOs and also the AI. We're gonna put a pin on that and come back to that in the next round, JP. But let me go to Vani. Vani, when Carlos compared all the kind of capital markets performance, he specifically singled out India as the high performance, high potential market. So maybe briefly introduce yourself and then give us your view on what's going on in India in terms of fundraising, investing, and exiting, please. Vani, you're on mute.
Oh.
There you go.
Yes, I got that. Hopefully you can hear me now.
Oh, good.
Yeah. So I'm Vani Kola, based out of Bangalore, with Kalaari Capital, which is a early stage seed Series A investor, primarily in emerging technologies, focused from India origin companies. Just the context to my comments. And we have been running this venture fund for over 20 years, from the early inception of venture capital industry in India. So we have some perspective on what has worked, what has not worked. What's interesting is this is the first year that the funding going into startups at around 14 billion or so has really shown a volume and confidence, and that's very, very significant. And perhaps for the first time, the investment volume is higher than it's in China, not because that's an important statistics. It's just to show the optimistic shift into technology companies in India and the concentration of capital that has grown over the last couple of years quite significantly. And early stage investing still accounts for majority of the transactions that we have seen. And that's where the comment that Carlos made of emerging managers still being favored versus global funds, because being on the ground to be able to lead early stage is really where the opportunity is. And then the growth, of course, I think largely global funds have been very, very active in that. So if I take the cluster of dollars, especially from funding from sector mix, as was pointed out, the consumer quick commerce has taken a significant portion of the growth dollars, and enterprise, Gen AI, SaaS has taken a significant portion of the seed investments from volume. So, two different sectors of interest, but for different kind of investors. And I think, as a side note, the comment on the quick commerce, contrary to perhaps conventional wisdom, that 10-minute, 15-minute delivery options in India seem to have become extremely popular. And they are in a density market like India, density from two aspects. One is, of course, the customer density, the consumer pockets, and how metros are set up in India, but also because quick commerce relies on local merchants from dark stores. So, and that also, unlike in developed countries, is already a layer of infrastructure that exists. I think combining the two has completely changed consumer buying behavior of not having to plan anything. And for almost from a fan to an AC to perhaps just ordering your ramen noodles, quick commerce has kind of taken off as buy when you want. Versus any kind of a planning, which is interesting, both for food and consumer goods. And also, for the first time, there was a lot of conversation, usually when you talked about India, on liquidity. And right now, I think in liquidity drought, the Indian IPO market has actually been quite vibrant. And I think by volume of companies, obviously the valuations of US IPOs are at a very different scale scope than India, but from volume of companies that have gone IPO. I think it's one of the highest globally that what we have seen in and valuations. We had expected with all the volatility that we are seeing at so many levels in the world, perhaps would be collapsed, but that hasn't happened. Though valuations have somewhat normalized, I think there is still a lot of expectation of India opportunity, and hence I think the valuations are still rewarding for companies that have market leadership. So the bottom line, India is in a probably selective growth, meaning that for once there is enough capital available, and public market exit path looks very vibrant. We have 3 companies that are on a public market path this year in the second half alone, from a significant valuation guidance the market seems to be interested in. So I think there is a vibrant market from seed to exit in the best form compared to the last decade. So looking ahead, I think there's a lot from and I think Carlos talked about the kind of companies that are getting invested. He mentioned space tech. We're involved in a very exciting company in that space, and in other emerging spaces. India, for the first time, is getting Indian startups or entrepreneurs are looking for India to global tech companies, and a lot of seed capital going into those models at a volume that I haven't seen before.
Amazing information, Vani. I was in Hong Kong a few months ago talking to the CFO of a large PE firm. I asked him, hey, how are you guys doing? He said, our deal flows are very strong. We are 100% full power on India. So that tells you how important India is. It's just a hot market right now. And so let's go from one hot market to another hot market, which is MENA region. And for capital raising, investing, maybe for other geopolitical reasons as well. So I wanted to ask Noor, if you could briefly introduce yourself and then give us your view on the fundraising, investing, and exiting in the MENA market, please, Noor.
Thank you, Lee, and thanks everyone. I think the MENA region is generally, thought of as a place for fundraising. But I run a venture capital firm here, so I run Global Ventures. I started the firm about 8 years ago. We are deploying out of our 3rd fund, managing about $400 million. And we focus across MENA. We do generally Series A investing. We are now raising a fund that's more focused on Series B because that's where we see the gap is. But to your point, it's been a hot market. Last year, we had 30% IPO growth. So despite what's happening in the world in these closed IPO windows, ours has been wide open over the last few years. We had the first regional decacorn, which was Talabat list last year. So that's been great. So it's very young and nascent. I would say that last year we had about $2.4 billion of venture funding across MENA, all year, all deals. It's a very small number compared to the global $290 billion. Our entire ecosystem is $2.4 billion. It's like one very large round in the Bay Area. But 8 years ago when I started, we had 400 million. So we've come a really long way, and I think that's what's making this place accelerate so quickly. How we see this space, so we are looking across sectors. There's been a lot of exciting events in fintech, as you mentioned. We're in Tabby, we're in MoneyPoint, so 2 of those wonderful brands and logos that were up on your slides earlier. So we come in Series A. We do a lot of fintech. We do a lot of health tech, ed tech. Right now, we see huge momentum in supply chain tech in the region and in agri-tech. And also looking forward, there's a lot of stuff in energy, blockchain, or crypto, and AI. So we hear a lot about what the region is doing in AI. There, and it's becoming one of the global leaders. We hear a lot about crypto. The region had the first virtual asset regulator called VARA, which is based in Dubai. And that was the first one to start regulating digital assets globally. And then we hear a lot about energy. So what we see, not just contentious types of energy, but we have the second largest solar farm in the world. 25% of the UAE's energy last year came from wind solar. So as we start to think about what's happening in this part of the world and why you have these large companies and very large outcomes, MENA's 450 million people, half are under the age of 30. So you have this rising demographic. It's the most digitally engaged population in the world. And then you layer on top of that, I think what's macroeconomics and fundamentals, which is you have this very fast growing large population, and it doesn't have the required infrastructure across industries. So what does that mean? 8 years ago, we were 85% unbanked. Today, we're 52% unbanked. Nobody built banks. We have 1 doctor per 1,000 people. In Sub-Sahara, you have 0.2, but in Europe, you have 4.5 doctors per 1,000 people. We'll never have enough doctors or hospitals. So how do you fill that gap? So it's not about replacing or improving infrastructure. We still import 85% of our food. So when we talk about agri-tech, it's about how do you build agriculture tech first? How do you build finance tech first? How do you build healthcare tech first? So you're creating industries. And because of this huge young population, adoption is very quick and high. You're not replacing industries or trying to change industry incumbents or change regulators. You are literally building industries from scratch using the world's best technology, capturing hundreds of millions of people. So that's how we think about it, what's exciting, what's really hot, all of those sectors. But I'll stop talking now and let the conversation keep going. Thank you.
That's an amazing example, Noor. Especially as a banker, I take notice of that unbanked number you have there. So for any unbanked or underbanked VCP or tech firm, SVB would love to be your bank on that part. And then back to Carlos' report, he specifically talked about the promising future for Southeast Asia, and then he just cannot stop talking about Malaysia, how good Malaysia is. So I wanted to ask you, Michael, your firm is certainly is a known expert in Southeast Asia in early stage investing. And I wanted to ask you to briefly introduce yourself and also give us your view on the fundraising, investing, and exiting in Southeast Asia. Michael.
Sure, and thanks for having me. I know why he cannot stop talking about Malaysia. It's because of the food. That must be the main reason. Thanks everyone for having me. It's very good to be here. My name is Michael Lints. I'm a partner at Golden Gate Ventures. We are a Singapore headquartered early stage venture capital fund. We manage 4 funds across Southeast Asia. We have an office in Singapore, Indonesia, and Vietnam in Ho Chi Minh City. I'm currently in Doha, Qatar. I moved here 18 months ago to launch and manage our first MENA fund. It's also amazing to see Noor. We've co-invested alongside her firm in 2 deals. So we're active now as a firm here on the ground as well. In terms of Southeast Asia, I think we've had a very big roller coaster ride, and the way I explain it to a lot of our friends in the US is we're the little brother between India and China, and we often look at those markets as big brothers. We've had I think a very tumultuous 2024. I think both on the fund level, fundraising standpoint, and on the deal level, on a capital raise standpoint. But we're seeing some good signs in Q1 of 2025. And I'll take JP's page that the glass is half full. So if you look at the number of capital deployed in early stage companies, we're close to $1 billion for Q1 of 2025. So that shows an increase to last year. So that is very, very positive. In terms of the sectors, we are seeing fairly similarities with markets such as MENA, with markets such as Africa. So a very big fintech focus. There's a massive focus on health tech in the region as well. But there's a few interesting items I like to highlight. So the one part is because 23 and 24, were tougher years from a macro standpoint. You kind of see the resilience of the founders. We have to speak about exits and liquidity. And if you look at Southeast Asia, with different countries, you're facing different exit landscapes. Although you have the Singapore Stock Exchange in Singapore, it hasn't been amazingly friendly just yet from a tech exit standpoint. But now we're seeing the resilience of founders. So to give an example, we're seeing portfolio companies expanding into markets like Australia because there's a nascent market for them to either acquire companies, sort of land and expand into a new market, where all of a sudden you're a Singapore Indonesian company, you're acquiring a property in Australia, and all of a sudden you're a much more mature company. So from an M&A standpoint, founders have become way more advantageous from the Southeast Asian region to acquire properties. Not only in Australia, we're seeing this in markets like South Korea, even in the MENA region, and some in Europe as well. So as opposed to looking at just organic growth or growing in your home market, we're seeing portfolio company founders growing beyond the Southeast Asian region. And obviously those companies tend to be Series B plus, Series C, and Series D. But what it helps is it expands their footprint, and all of a sudden they become more attractive as potential acquisition candidates for larger conglomerates globally. So I think that is one thing that founder resilience has shown from the region. I think the other thing is around repeat founders. The ecosystem in Southeast Asia is we're about 16 to 17 years young. Our firm is about 14 years young. We're now seeing even in our portfolio that founders we backed in 2012, they're now coming back with their second or their third company. And we're seeing some very interesting trends on the robotics side is where we're very, very excited. On the quantum communication, I know quantum is still very early, but we're seeing some early signs of companies that are having proprietary technology on the quantum computing side, and from Singapore using it as a more global hub. So although 2024 has been a rough year, we're seeing some very positive signs and some very positive trends at the start of 2025.
Very interesting perspective, Michael. Appreciate that. Certainly, with the tariff war around the world, a lot of people think Southeast Asia may be the ultimate benefit from this. So on that, I want to go back to JP. You mentioned AI several times in your earlier remark, and given the AI race between the global powers nowadays, and what sector in terms of AI is hot in Asia and what's not? What's to avoid, if any? If you can answer in maybe 1 minute, that would be great, JP.
Let me unmute. So I think in the last couple of years, a number of so-called large language model companies have got hundreds, if not billion-dollar funding. Again, it was in Carlos' presentation. So I think, and then you probably hear about DeepSeek, which had a open source foundation model that's really good and consumer much less computing power. So I think by now, in general, the race for large language model or foundation model are more or less done. There are this, a dozen or half dozen companies in China that have built a functional, efficient large language models. I think people are moving toward investing in agents, basically using software and foundation model to complete certain tasks. Not just answer your questions, not just chit chat with you or play your cute friend, but actually doing some real work, like writing code or booking plane ticket or other things for you. And the second trend is a lot of people are looking at so-called embodied intelligence, basically robotic technology. Again, many companies are working on the next generation robots that have been seen in movies in the past. It is coming. Companies are moving on, are working on, 4-leg robots, 2-leg robots, arms, and brain and everything. I think those two are probably the largest subsectors within AI that are attracting substantial amount of capital.
A very interesting story about the 2 legs or 4 legs robots over there. Thank you for that, JP. I wanted to turn to Vani again. Vani, so in the past couple of years, one of the hottest area investing here in the US is private credit. I want to ask you to give us a view of what's the kind of a venture debt private credit market in India, in your view, maybe in a minute or so, please.
Yeah, so the venture debt volumes in India are at a record scale at around 10% of the venture investment that's going in. I think if I remember my numbers, last year alone, there were over 200 deals that got venture credit. And it's also become institutional entry is accelerating with while we had a number of firms that were local, like Trifacta, Innoven, which started out as actually an arm of SVB, Alteria, and some of these were more local funds. But now with large funds like Mubadala and others that are also getting into, the global allocators are getting into India. And I think the market is viewed as a scalable credit market. Indian founders seem to really for this because they feel it's less dilutive to founder equity, and founders in India tend to be far more sensitive to dilution than founders elsewhere. And I think investors are largely supportive, though they don't necessarily see this as a effective instrument in creating equity returns for them, but they support the founders on it. So net, I think the market depth for venture credit, both from global allocators, local credit companies, as well as actually family offices prefer venture debt as a strong allocation. So it's growing very rapidly. It's expected to reach 60-70 billion in 2030. So a very large market for private credit.
Thank you for that, Vani. I appreciate the perspective on that. And another question for Noor is that, Noor, you are a founder turned investor. So if you look at the landscape in MENA, and let's say if you were to start another company right now, what are the possible 2 to 3 sectors you will focus on and why? Maybe in a minute or so.
So, I think that for me over the next 5 years, the sectors that we expect the biggest shift in, if we think, 5 years from now, what's massively different to 5 years ago, the 2 that really come out of me are energy, but, bottom up. So given where we are with microgrids and given where we are with the cost of solar and all of these different functionalities, we're seeing so many young companies solve for lack of power. You have 760 million people without power in the world. Of them, 700 million are in the Middle East and Africa. So that's one. And I think the other one that's really exciting is the future workforce. The idea of a 9-to-5 job, 100 hours a week or 60 hours a week, or this full-time work is about 120 years old. And it's really Henry Ford that rolled that out. Before that, for hundreds of thousands of years, we used to work 4 or 5 hours a day and seasonally. So I think as we think about the gig economy becoming the main economy, and what AI does and what the softwares are that enable people to get their life back and have work be a part of their life, not the other way around, those technologies are fundamentally game-changing.
Very interesting sector you picked over there. So lastly, I wanted to ask Michael again, and certainly we mentioned that Southeast Asia will benefit from the kind of tariff war between the US and China and globally. And a lot of international LP showed a lot of attention, interest in Southeast Asia. What are the maybe top 2 or 3 advice you will give international LP interested in Southeast Asia, Michael?
I'd say the first big piece of advice I would give is you want to deep dive into specific markets. Indonesia is so different from Vietnam and so different to Malaysia and Singapore that although we are called one region, Southeast Asia, the differences in a per country view both from a macro perspective as from an opportunity perspective is very important. So spending time on the ground and doing like proper research in understanding what are the pockets of sectors that I want to be investing in is very important. And the second thing is this, not just speaking to our own firm, there are amazing GPs in the region, but just partner up with a GP and it just helps sort of really navigate the market. And it doesn't matter if you work with us or some of our amazing peers across the region. You'll notice the difference in finesse in terms of what is a good deal, what kind of understanding do I need about the market, in terms of liquidity, really sort of understanding your wanted outcome of a deal. Again, doing a deal in Vietnam is intensely different than doing a deal in Singapore, which has the propensity to go more global. So having that understanding is very helpful. And then if you are able to partner up with either one of the larger families, one of the GPs on the ground, that is always super helpful.
Yeah, a lot of our clients echo that perspective as well, because Southeast Asia is a relatively segmented market, not a single big market. So having the in-depth knowledge of each country will be very helpful as well. And you mentioned the GPs, the LPs, etc. So on this call, we have a group of LPs, GPs, and also founders as well. They are interested in the investors' ideas, but also interested in your firm as well. So the last question, I wanted to see whether you can give us a quick 1 to 2 sentence answer. JP, starting from you, what makes your firm unique compared to the pack? Maybe 1 or 2 sentence answer, JP, please.
Right. I think I would say the global perspective of the venture world. I'm here with my fellow panelists from different parts of the world. I think increasingly we're seeing Chinese tech entrepreneurs going overseas, going to the global markets, including Southeast Asia. I mean, you see the data center being built in Malaysia, right? The huge amount of capital going into data center in Malaysia, in Singapore, in Middle East. Actually, Malaysia is a country of 30 plus million people. I think the computing power is not just for Malaysians, it's actually for global audience, and many of them are the Chinese companies. I think we are uniquely positioned to have the global perspective to invest with these entrepreneurs going to different parts of the world.
Wonderful. So global perspective for INCE Capital. And then Vani, what about your firm? What makes your firm unique compared to the pack? 1 or 2 sentences, please.
We are very deeply focused in India, and we understand this market, having been doing this for 20 years and established track record of not just investing, but returns, and a very, very strong governance reputation on the board, and the quality of companies from governance guidance from a very young stage. So setting the DNA right for a collaborative relationship with founders and exits. And then the tech background of the investment team and their global experience and exposure to help the companies really operationally scale. So those would be some of the things that we pride on and double down from our competence and commitment.
Wonderful. Love that commitment to the India market and also the very in-depth focus over there. So Noor, you know what I'm going to ask you on this round. So go ahead, please. You're on mute, Noor.
So sorry. I think if I was to say there's one thing about our market that just makes it really exciting over the next few years, it's really taking a look at how we are using, technology, whether it's AI, crypto, to just create industries, and how the government and the regulators are just working with founders and enabling that growth. I think the most exciting thing we're investing in right now is a biotech company or a tech bio company that's created a 3D printed chip to deliver cancer and oncology products that's working Cleveland Clinic, Abu Dhabi. And that's just so different to what you could have even imagined 10 years ago, to say that Abu Dhabi is at the forefront of any bio advancement.
Wonderful. A lot of optimism in your answers over there. So, Michael, lastly to you, what makes Golden Gate Venture unique compared to the pack, please?
If I were to pick maybe a combination of two things, most of our partners are former operators. So I've been in the trenches in terms of working as an operator, building a business, exiting a company. I think as early stage founder, it is beneficial to work with partners that understand what it takes to build a successful company and make all the mistakes that you can make as an entrepreneur. And I guess the second part I would add is, I honestly feel blessed to kind of be here in the MENA region, having the ability to be a gateway for Southeast Asia for our MENA portfolio, and then vice versa for our portfolio in Southeast Asia to be a gateway to the MENA region. I think positions us very uniquely.
Excellent. So I want to thank JP, Vani, Noor, Michael for your insight, for your information about your region. Really smartest investor we've known. Appreciate that. Also, thank you to the audience dialing in from all over the world. Wonderful session. And we're going to follow up with the report that'll be sent to you, and also the recording be sent to you as well. So no matter where you are in the world, have a wonderful day, wonderful evening. So thank you so much. Bye from the Silicon Valley.